I have a map here, which I want to show you. This is everything related to tax entity for small businesses. There is, generally speaking, 90% of small business owners who come to us, they will be one of these boxes. There is no other way to be around, right? Of course, I didn't really include this big umbrella of living trust, but that is not a tax filing entity until you are dead. So we don't talk about anything after we are dead today. So we're talking about the life we have right now. So look at this map. Look at this map with me. And there is a line in between. It's sort of like underground, above the ground. So you can see that above the ground, there is LLC, multi-member, right? Did you notice that? If you do tax planning at some point of time, your CPA would probably tell you that, okay, let's change your LLC. Let's elect your LLC to be S Corp, C Corp. That's why you see this dotted arrow goes to S Corp, C Corp, because LLC can elect itself to be that. So this is the flexibility of tax structures. You don't have to, you don't have to be who you are, what you are at the formation stage. You can transform yourself into a different identity. And then S corporation, you see underneath the LLC multi-member is the S Corp. You see how S Corp, you formed S Corp. You went to your lawyer, you got your S Corp pull out. And then you come to Ying, and for different reasons, we're saying that no, you cannot be an S Corp. It is most appropriate you be a C Corp. And you don't have to redo S Corp. You can revoke that status to become a C Corp. That's why there's a dotted line to C Corporation, right? And then if you look at the LLC multi-members and S Corp, and they all issue K1s to your 1040. So the box on your right with the two little box inside, that big one is your 1040. That 1040 can report business under Schedule C, can report business under Schedule E, and also there is LLC single member LLC. That is a disregarded entity, is literally equal to Schedule C. All right, folks. So that your LLC, so it's inside of your 1040, and when it's appropriate, you can move that out to become S Corp, C Corp, or LLC, but it's a multi-member partnership. That makes sense? So that would be a really good way to have a concept that it is really flexible. It is doable to make changes right from the beginning. And that's why the new company tax planning is not a wasting effort. It is something that can really improve your quality of life in the business. And underneath that line in the basement, and what we see is C Corp and nonprofit. You see how C Corp and nonprofit, they don't really go, they don't issue K1s to 1040, right? So the only thing from C Corp can go to 1040, can go up to the ground level. It is the W-2 that C Corporation issued to you, and also 1099 dividend if you are a shareholder that was giving out to you. So that C Corp itself can elect to be S Corp if they want to come out of the basement, right? Nonprofit is the same thing. The only way for nonprofit to impact your 1040 if it is nonprofit issue a W-2 to you, right? But of course, you can impact the nonprofit going down in the basement because you can donate. You can donate, then reduce your tax burden, but money goes to nonprofits. This is kind of like a big traffic map for you to realize that, oh, I can work with this. I can work with this upstairs, downstairs, and making sure that my business fit into one of these boxes at the right time. You do change, because I always said to my client that if you have a business under Schedule C is making more than $20,000 profit, 20,000, not a lot. And you probably already should move out of 1040 to become what? To become a LLC. If you are a single member, we can become S Corp, C Corp, an LLC multi-member. So you need to come out of the 1040 box. So that would be what we would recommend you when you have $20,000 profit under Schedule C, time to move, right? But if you have $250,000 distribution coming out of S Corp to you yourself, it is time to upgrade yourself to another entity, which we recommend C Corp. Of course, C Corp right now is have 21% of tax rate, and it just depends after this midterm election, how things going, maybe 28% tax rate would come in. So we will, of course, tax can never be independently operated without political agenda. But when political agenda get implemented into taxes, it is really your tax advisor's job to be flexible, to know how, where and how and when to move your business. So when you are new, you need to be even more sensitive to that than other people.